This is the Rich Dad Radio Show. The good news and bad news about money. Here's Robert Kiyosaki.
Hello, Robert Kiyosaki, the Rich Dad Radio Show. The good news, and today could be the bad news, depends upon your point of view on this subject of money. And we have a great guest. Well, I have a great guest, but the date of today is an important date. And the reason that's important is just yesterday at Davos, Switzerland, the IMF stood up and said, the world economy is heading into the worst economic headwinds since World War II. The worst. And that's why it could be bad news, but depending on how you look at it, it could be very good news. And our guest today is our dear friend Raoul Pell, and I want to thank you for making Kim and I very rich. And the reason is because I don't know anything about crypto, and you're the crypto king. And I called you and I said, "What should I do?" Because crypto was falling like a rock. This was a while ago now, and so Kim and I picked up 30 Bitcoin at 6,000. Kim,
nice trade.
And 30 Bitcoin at 9,000. And, as all traders do, greed is not good. We stopped. And I'm still waiting for the retrace back down to maybe 11, and we'll get back in. Any comments, Kim, on me? Because we love people that make us rich, right?
Yes, we do. Yes, we do. And I'm excited to have Raoul on their show. And Raoul is the founder and CEO of Global Macro Investor and Real Vision. And Real Vision, I've been watching so many of your videos, and it is a wealth of information and education. We talk about real teachers and fake teachers. You're a real teacher talking about what you do and what you are living every single day. So I just want to jump in and get started. And I think, Robert, you've got the $1 million question.
I just got one big question, okay? ¿Qué pasa? What does it mean when at the Davos, Switzerland, the IMF says we're heading into the worst financial headwinds since World War II? So you're global macro. What does that mean for the world, Raoul?
This is about as macro an environment as I've ever seen. Mm-hmm. And I think most people's read on it is probably wrong right now. So, okay, let's go back and say, I'm going to take you through a history lesson. Good. And then we'll get to today.
That's
and
macro.
I'll tell you why I'm concerned.
Yeah.
So why World War II? World War II was a fascinating period because, like COVID, the entire world had basically been stuck at home or been on battlefields. Everyone came back. There was no supply of commodities and goods. Global supply chains were broken, and everybody came back and started consuming again. And guess what? Inflation went up to 13% or something, maybe even higher. And that period was fascinating because interest rates went up. And the first thing that happened was the economy went straight back into recession, and rates and inflation went negative because it was a massive tightening of monetary conditions. You raised the cost of goods on people and didn't raise their salaries enough. People couldn't get the goods that they wanted, exactly like now, and everything collapsed. So we went back into recession, and then eventually some better times. And I'll come back into the 1940s and 50s because I think it's a really important parallel that most people misunderstand. The next time we saw anything remotely like this was 1974. A lot of people tell you it's the 70s again, inflation. Well, the inflation episode we had in the late 70s was driven by demographics. That was the baby boomers entering the workforce all at the same time. It was the largest demand shock the world had ever seen. And we had a supply shock of these oil crisis, of the Arab oil embargo. That's not repeating now. What is actually more similar is 1974. 1974 was the Arab oil embargo. The price of oil tripled and interest rates went up. Inflation shot up. And the immediate effect was the economy went down the toilet. Almost do not pass go. The stock market fell 50%. And the ISM survey, which is a good guide to the business cycle, it's the Institute of Supply Managers survey. Anytime it crosses below 50, suggests the economy is getting weak. A recession comes at about 47. It hit 30, which was the lowest in all history. And it happened in a space of 4 months. It went from roughly where it is today, which is around 55, and went to the lowest level in 4 months, based on exactly the same kind of setup we've got now.
So are you saying that the 70s are now pretty close?
Yes, and inflation fell in 1974 afterwards. People are still thinking inflation goes on forever. It did not, and it did not in the 1940s either. Then the next one up is 1984. 1984, we saw an issue where global trade, there was a huge amount of trade disputes. The dollar was pretty strong, like it is now. Interest rates were going up, and inflation was high. And everybody was fearing, looking back and saying, oh, we don't want the early 80s, late 70s again, the inflation. So Volcker was tightening rates too much, and the economy collapsed. It didn't go to recession because the Fed quickly started cutting rates, but the dollar went up a lot more and created a lot more problems. We ended up with the Plaza Accord in 1985, when everybody had to stop the dollar going up from destroying the global economy.
Right.
So then the next time we see something similar was 2008. 2008, if you remember, the oil price was at $147. Inflation was 6%. The Fed had been cutting into that because the economy was imploding. 2018, exactly the same. Oil prices high, inflation high. The Fed were hiking rates, trying to tighten the balance sheet. And what happened is the economy rolled over really quickly again. Okay, so what's going on here? Why does this phenomena keep happening? Everyone extrapolates inflation out forever. What actually happens is that consumption falls because we've tightened monetary conditions. So tightening monetary conditions to ordinary people means the cost of your mortgage has gone up at the fastest pace in history. Over a 1 year period, mortgage rates have never risen this fast. So any money you borrowed has suddenly got much more expensive. Your wages haven't kept up with the cost of just basic services like food. So you're actually feeling poorer. So you can't consume as much, and you start not consuming other things. People overextended on housing because they rushed into housing in 2020 and 2021, and the rates have gone up for them. Also, just the rise in things like the cost of oil has meant that, gas prices, all of this stuff, and then the rise in the dollar, which is a monetary tightening. All of these things get together would suggest, and I put them on a chart, it suggests that the ISM is going back to 30, which is as it was in 1974, which is a terrifying fall. Now,
what does ISM stand for?
Institute of Supply Management. It's the survey of buyers at corporations who buy goods and services. They ask them, what is your reading the economy? How much inventory have you got? What are prices paid like? That kind of stuff. And they create these surveys, and they're readily available online, and you can have a look at them. And they go up and down with the economy. They tend to lead the economy. And it's suggesting that if we're not careful, we could have a very sharp, nasty recession, meaning kind of a negative 5% GDP recession. It might be short, depending what the Fed does, and we'll come on to that in a bit. So we've got the setup that we've seen many times in the past. We've got the forward-looking indicators, this monetary tightening, suggesting we've got some real pain to come. Then the anecdotal evidence, we're seeing all the tech companies who were bulletproof laying off staff and giving earnings warnings because everybody can't raise prices enough. So their margins are falling and people have overextended. Amazon said, we've hired too many people. They're one of the biggest employers in the United States. Okay, this is not good. But the answer to higher prices is higher prices. And that's what's happened. And everybody's looking around you themselves saying, well, what's going to break? When stuff like this happens, the market goes down, something's going to break. We're looking, what bank is it? What hedge fund is it? The actual answer is, it's the economy. The economy has just broken. And the Fed are going to have to pivot.
And that's what the IMF is saying in Davos yesterday.
They're saying, and it's dead right, the monetary conditions that we've imposed on corporates and people is the biggest tightening in all history.
Wow.
We've also got China slowing down very fast because lockdowns, but also they've been in recession. So we've got and Europe with a war and having to deal with this energy transition. So we've got no leg of global growth here.
Oh.
Now, the question is how bad does this get? So let's talk some scenarios.
May I ask a real quick question? Okay, when people use the word recession, that means 2 back-to-back quarters of negative growth. Is that your definition?
That's the technical definition of a recession.
Okay. So what does it mean to Raoul Pell? In
Generally,
everyday, what does it mean to you and me?
To you and me, I think it means a loss of jobs and a loss in your net worth because it's the falling of asset prices that comes with a recession.
Now, what's the possibility of sliding to a depression?
So depression, I would suggest, is a much longer, more extended period. I don't think that can happen right now. Now, I don't say that with certainty. I never do, talking probabilities. Yeah. The reason being is there's one piece of magic, the Fed balance sheet. The Fed balance sheet disguises all bad things because what it does is when they print money, it lowers the purchasing power of the dollar. And most of the central banks at the same time do it. And people always think it's going to be inflation is what it leads to. It leads to something much more pernicious and evil, which is the debasement of currency. And what that does, how it manifests itself, is all of these scarce assets, equities, real estate, gold, crypto, go up a lot. But all they're doing is reflecting the devaluation of the fiat currency itself. So that optically can change everything because suddenly all of these things go up, everybody feels okay, and it changes the outcome. People are still worse off generally, but it's a trick. And so I think that trick gets played again pretty soon. This time, I think the trick gets played in a different way, which was the other genie that came out of the bottle in 2020, which the Europeans are doing now. Some states in the US are doing, Japan is doing, and a few other countries, which is India's doing, which is direct transfer payments to individuals. So as opposed to making a big fiscal stimulus, like we're going to cut taxes, give people money.
When I heard you talking about that, Raoul, I thought you went to the dark side, man. But, going, what is wrong with Raoul? He's talking about MMT, UBI, and all that stuff, which is, to me, Marxist. Do you know what I mean? But you're also looking at it from the humanitarian side.
Yeah, look, these, regardless of what our political or economic views are, this is what is going to happen. So we have to judge it with that lens, not how we would like it to be, but what it will be.
Okay.
And what the probabilities are.
Okay, Raoul, hold on. We're going to need to go to break. But Kim, this is, I was listening to you, Raoul. I was going, oh, gag me, man. But then it took me, as I always say to Kim, the hardest thing is to keep both minds open. You know what I mean? You got to listen to this stuff. Any comments before we go to break, Kim?
Oh, I'm fascinated by all of this, and I just brings up more and more questions. And when we come back from break, I want to go into it. So if people get more money, is this just kicking the can down the road? Do people hoard their money? What do they do with it? Does consumer spending go up? Is it just a Band-Aid that eventually is going to come collapsing? So I got a ton of questions when we come back.
Yeah, Kim and I are real estate people, and I look at the emptying office spaces because people are not going back to work. This is not an ordinary recession. No. Apple says they're not going to go back to work. All the office buildings empty. And, residential real estate depends upon jobs. Do you know what I mean? If you're saying recession means a loss of jobs, which Amazon's laying off, what happens to real estate wherever they have an Amazon office? So this is the ripple effect, which is why I'm saying, May 23rd, 2022. So it is. I don't know where I'm anymore. That was one of the biggest announcements I ever heard, that the IMF is saying the world faces one of the biggest economic challenges since World War II. And voila, Raoul Pell pops up. The perfect guy to ask the question. So we come back, we'll be asking you more questions and all this because what you're saying, like I say, is heresy to me because I'm a hardcore capitalist. I believe in teaching people to fish, not giving them fish. But what you're really saying is we might have to. You know what I mean? So we'll be right back with Raoul Pell.
This episode is brought to you by 8 Sleep. Good sleep is the ultimate game changer and nature's best medicine. Consistent good sleep can help reduce the likelihood of serious health issues, decrease the risk of heart disease, lower blood pressure, and even reduce the risk of Alzheimer's. Yet, still more than 30% of Americans struggle with sleep, and temperature is one of the main causes of poor sleep. In Arizona, where I live, it can get hot. However, now I'm falling asleep in record time, faster than I have before, all thanks to my 8 Sleep Pod Pro cover. The Pod Pro cover by 8 Sleep is the most advanced solution on the market for thermoregulation. It pairs dynamic cooling and heating with biometric tracking. You can add the cover to any mattress and start sleeping as cool as 55 degrees or as hot as 110. The temperature of the cover will adjust each side of the bed based on your sleep stages, biometrics, and bedroom temperature, reacting intelligently to create optimal sleeping environment. The result? 8 Sleep users fall asleep up to 32% faster, reduce sleep interruptions by 40%, and get overall more restful sleep. The Pod Pro cover by 8 Sleep is so popular, it has garnered attention from CEOs, high performers such as Olympic gold medalist Red Gerard, and top CrossFit athletes, including 2021 fitness man on earth Justin Medeiros. They're all powered by 8 Sleep to make the most of their workouts and recovery, because good sleep is the ultimate game changer. Go to 8sleep.com/richdad to check out the Pod Pro cover and save $150 off Pod Pro and Pod Pro cover at checkout. 8 Sleep ships to the USA, Canada, and the UK.
Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and possibly bad news, but I think it's good news if how you look at it. Our special guest today is Raoul Pell, and I started this whole show with the IMF says the world economy faces the strongest headwinds or challenges since World War II. And so Raoul Pell is talking, he's a macro global economist. He walks the talk. He knows what it is. He's made Kim and I very rich on his recommendations of when to buy Bitcoin, and we're very proud of that. But one thing that he mentioned is talking about talked about debasement of currency. So here's a penny, it's copper. And in 1964, I was looking at the quarters and dimes, same color. Do you know what I mean? It's the same color. So basically, in 1964, dimes, quarters, and half dollars became copper. And that's what you were talking about, debasement. And I think we're paying the price for it, because I'm really glad you started with history, because macroeconomics is history. You have to look back in time. And every time people did this, first was the Chinese, they printed paper money, and the Chinese empire collapsed. And then when the Romans did the same thing, debased the currency, the Roman Empire collapsed. So when the IMF made that announcement, I was going, oh my God, thank God Raoul's coming on. Because are we looking at the end of the American Empire? Any comments, Kim, before we go forward?
Yes, and I also want to just mention that Raoul has Real Vision. I will recommend people go to Real Vision, because that's a wealth of information, and you've got the greatest guests and greatest conversations going. But at the break, we were talking, Raoul, about the timing of all of this and how fast this could be happening. So can you go into what you're seeing coming down the road?
I think it's going to happen at a shocking speed. So 1974, we went from everything looks okay to the worst recession since World War II in 4 months. I'm thinking it's going to look similar because of the speed of the monetary tightening, the speed of the rise of prices. So I think we are going to have a very ugly few months, both economically and for markets. The question is what comes next? And that's the key point. If my base case comes into play, which is the Fed pivot, they stop raising rates. They already started suggesting maybe we'll pause in September. My guess is June will be the last hike. And after that, they will say, well, we're just going to see, and we'll see the economy start going down the toilet. And they will start thinking, well, we're not going to do QT now either. So they're not going to start shrinking the Fed balance sheet. And before you know it, we're going to be talking about rate cuts, but we don't have many rates to cut, rates are nowhere. So the only outcome is they're going to have to print money. The credit markets are already starting to dry up. That's usually an indicator. The housing market's rolling over. That's a bad indicator.
Printing money is this stuff here. You have silver coin. You have a copper coin made silver, right?
That's right.
Basically, it's called debasing the currency, which the Romans and Chinese already did.
Yeah, because don't forget, debasement of currency works in a simple way. If you're really thirsty and I have a bottle of water, you'll pay anything for it. If you're really thirsty and I've got 5 bottles of water, you're kind of thinking, yeah, I probably need some of that water. I'll buy them all, but at a lower price. If I say, here's 1 million bottles of water, you don't want any of it because there's too much water now. It has no scarcity. So if you make too much of something, it becomes less valuable. So if Da Vinci had created 50 million pieces of art, guess what? They're worthless. And so it's that concept. And what it does is if something gets devalued versus something else, so we're not making more shares in the S&P. Actually, what we're doing is buying them back, making less of them. Therefore, the S&P goes up. Real estate. Yes, there's periods where we try and create new real estate, but generally real estate prices go up versus the Fed balance sheet because it's a relatively scarce asset. Same with gold, same with crypto. So that's the phenomena.
So, Raul, I'm trying to talk Kim into buying a bar because there's going to be a lot of drinking coming up.
Well, it depends how fast it is. It might be a lot of shots, but it's not going to be a long session. It depends how fast they deploy the balance sheet, because this balance sheet magic optically changes markets. And if markets go up, then household net worth stabilizes and spending comes back. Companies stop laying people off. So it's actually a bit of a magic trick, and it is a trick, right?
It comes down, you know that old saying, the bull goes up the stairs, the bear goes out the window.
Yeah.
So, but the bear is about to go out the window. The question is, when does a bull start climbing again, right? Is it kind
That's
of what
right. And we either go through a scenario like 2000, which was a typical old school recession where, equity markets, unwound excesses, the bear market was 18 months or so, and then the Fed keep cutting rates and eventually it stabilizes. But if we look at 2008, which was the next recession, as soon as the Fed used the Fed balance sheet, we pretty much stopped in its tracks. Happened really quite quick after they did that. They cut rates first, didn't really help because the banks had seized up. Then they used the balance sheet. Then they did it again in 2010, 12, 16, and then 18 was the Fed pivot, the Powell pivot, where they went from hiking to, oh my God, we need to cut.
Right, and Trump yelled at the guy. He says, "You cut this out. You're killing my economy."
That's right.
Yeah,
and they were right, but he was raising rates because Trump had cut taxes, and it had given this boom, and they didn't want inflation. So inflation had gone up.
Yeah.
But Powell, I need to do this, but the economy cannot take higher rates because everybody's so in debt and everybody's so old. That is the problem.
So here we are, 2022, right? We have employers not going back to work. So all these REITs, REITs, real estate investment trusts, they own all these office buildings, and then never has the Fed has. I think there's a $30 trillion debt now with $200 trillion off balance sheet. And they keep cutting rates and all this. My question to you is this. That's the reason I wanted to ask you. And your thing is about paying people universal basic income just so they can survive, which, I can now see your side of it, but it violates every bone in my body. But question is, can they keep doing the same thing given the conditions of today?
This is going to take us back to the 1940s in a sec. But in answer to your question, is what choice do you give people? Do you say, well, you're going to get destroyed because of the supply chain issues, because of COVID and all of this, and your wages won't keep up, so we're going to destroy household net worth, and everything's levered, so all the borrowings against houses and all the borrowings against equities and all of the borrowings on top of borrowings, and you're going to let the collateral go down and blow the entire thing up?
But isn't that what they're doing when they say they're going to pay off the student loan debt? Because if there's debt, there's also
that's debt forgiveness. That's MMT, right? which is coming, whether we like it or not. Again,
okay, I understand that.
So what you're trying to do here, what they're trying to do is reduce the debt via financial repression, which is you basically have inflation running slightly higher. So you have than interest rates. So what you want is to reduce the real value of the debt. So if you think back to your parents, how much they paid for a house and the mortgage they had, the mortgage seems laughable. It's because over time, inflation raised the value of the house and the debt doesn't get raised. So in the end, the debt is nothing. So
the way that is this stuff here make the money less valuable.
Correct.
Oh.
It makes the debt less valuable.
Right.
So it's okay if you're in debt, but if you're borrowing, if you're lending money, it becomes complicated. But anyway, the point being is you either have a fiscal stimulus, which is, let's say, the Republican view. We'll have a fiscal stimulus, cut taxes, and we'll put some spending. And what happens is that doesn't go to the people who are the worst off. Right. So it's creating this issue of 1% versus 99, which everybody can see and nobody knows how to solve. The issue is actually the balance sheet, because all of the expensive assets keep going up because they keep printing money.
The rich get richer.
The rich get richer. Yeah. But doing this blanket fiscal stimulus is hard because the rich get richer again. So I think people have thought, well, maybe we should just try and give it directly to the people who are most affected. Okay, fine. Those are the two choices, or you do nothing, which is too late because there's too much debt. So you can't let the system clear anymore. The old way would have been you let the system clear, it's all okay, you just have a recession, everyone stops borrowing as much money, blah, 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 blah. The world is 400% of GDP in debt. The world has never been this in debt in all economic history.
Raul, I hate to say this, I'm seeing your point of view.
Yeah, and what I'm saying is, regardless of your philosophy, it's difficult to find other outcomes that kind of make some sense. So let's go back to the 1940s now and figure out how bad it was then. This was the very similar setup, the worst supply chain issues, massive inflation, everybody coming back in. Well, what happened was the economy collapsed. Then interest rates came down and they stabilized. And they stabilized because the Fed stabilized them. Oh, and inflation was running slightly hot, 3%, and bond yields are about 2%. So real rates, meaning you in the property market, are going to make a lot of money. So negative real rates become very good for assets. And what happened in the 1940s and 50s was a massive economic boom. What we actually got was the value of the war debt eroding because of this financial repression. We had the value of assets like housing. The equity market went up 900% over that period of time. There was a lot of fiscal stimulus because you had to rebuild after the war, and companies were building factories. So if you think of now, companies are going to be rebuilding factories in the United States or in Europe and not in China. So that's going to add some stimulus. Yes, the jobs are not there. It's robots in the factories, but it's still stimulus for the economy. The government will do some stimulus, as we've talked about. Interest rates will remain relatively low. Inflation will remain controllable, but a little bit higher than it has been. And what that sets off is a period of stability and boom, because there's so much technology. There's a lot of big things happening in the world that could be. So that would be my rosy outcome, would be that. And I think that is still my highest probability, that we kind of muddle through this in a way that we don't expect, because it feels like the end of the world. Imagine what it must have felt like in 1948. All you can see is the end of the world. Mm-hmm. And then you get this massive inflation. You just think this is the worst thing that could possibly happen. What actually came out of it was something very different. It was the rise of technology. It was the rise of, the US as a big superpower. It was a rise of the rebuilding of Europe, the rise of Japan. It was an incredible period.
The Bretton Woods Agreement, where the dollar became the reserve currency of the world, and all these really good things happened for America.
Yeah, and look, we're going to unwind a whole bunch of that stuff now because it probably doesn't work anymore. We need to rewrite all of the Bretton Woods, and we need to rewrite the IMF and the World Bank, and all of this stuff needs to be changed for the modern world and blockchain technology and all of this. But it's the same moment. All of those things got built then, every one of them, from the Geneva Convention to the IMF to the World Bank to the United Nations. They all came in that period from 1947.
Right, same time.
And so this is that kind of period, that great turning.
Is this what they're kind of alluding to, but the Great Reset? It's all going to change again?
Yeah, it's the fourth turning.
All right, okay.
It's the fourth turning, and that's where we are. And this may be the final event of the fourth turning. It may be just another phase of pushing this towards it. 2001, 2008, 2020, and maybe now. It just keeps moving the world to the direction that we all know it has to go. Is we need to stop what we're doing and change what we're doing.
Right. So, Ralph, we have to stop because we're running. I could go on forever and ever and ever and ever. And,
One quick question though. As we're going forward, and you're saying this could happen in months right now. Are there key indicators we should be looking at and paying attention to?
I think I always say the bond market is the truth. The bond market, the job of bond market participants is two things only. What is the future rate of inflation and what's economic growth? Now in the stock market, it's like earnings and this and emotion and all of that. The bond market is simply two things. So they usually get it right. And the easiest way to look at it for most people is TLT. TLT is the bond ETF. If that starts rallying, which it's been doing strongly, before it was going down when the stock market was going down because everyone was fearing inflation. It's just switched. So bonds are now going up when the stock market goes down, which tells you the bond market's going, okay, enough's enough, guys. You've gone too far.
Is that why Harry Dent is yelling and screaming to buy treasuries?
Yeah, and I am too. It's the best trade.
That's interesting.
It's the best trade in the world at this phase, the next 2 to 3 months. At the end of this phase, I think the Fed come with their cannons again. Whether it happens quickly or in 3 or 6 months' time, it's coming, and the markets will start to the Pavlovian response of the cavalry's coming. And then I think it's very positive for things like cryptocurrency, probably gold, and a few other things. Real estate, I think, is going to take a while, but I don't think it's probably a big event. It got very frothy. It probably corrects somewhat. But again, I don't think the Fed or anybody else wants to see the property market go down because everyone's got the learnings from 2008. So yes, it softens a bit, etc. I think it's okay, and you'll probably get some bargains.
Well, it depends on the type of, because Kim and I are massive real estate investors because we use debt. And I look at retail and then I look at office buildings and I'm going, oh my God, but warehouses do good. You know what I mean? And
exactly.
Apartment houses do good.
And this is a structural shift in the global economy. We're never going back to, that chicken run of 1,000 people in an office floor. I mean, I used to work at a trading floor. The guy next to you earns $20 million a year and he sits 3 feet from you with no privacy in this like battery hen formation of people stuffed in for the maximum productivity. That's gone. I mean, at Real Vision, we got offices in New York, offices in the Cayman Islands, offices all over the place. Nobody goes to the bloody office. We've downsized it once and still nobody goes. It's like 3 people out of 60 go to the office every day. So it's done. Nobody's doing that again.
So,
last point, I know we're done. Last point you said, Rollet, I heard you say before that he or she who has cash in a recession is king.
Correct. Because if we're right here and you got cash and we're going to see this big whoosh, and it probably means that the economy and asset prices, there's certain things it's going to set up for, right? We were talking off air about, the opportunity to buy cryptocurrency into this sell-off. Yes, because it is the technology of the future. It also protects against this debasement. We will see, let's say, technology equities, things like genetic sciences and AI and all of this stuff that's coming. It's coming faster than we can ever imagine. Most of this stuff is down 80%. I mean, hell yes. This is what we're looking for. If you want to generate wealth, this is the time to step up.
Yeah, this is the best time.
And you might have the ability to own both commodity stocks because the supply issues are still around for a while. Commodity stocks and technology at the same time, which a lot of people think is weird. It's like you need to be one or the other, and they have this warfare over it. I think both will work quite well as a barbell strategy.
Yeah, just FYI, we don't own any stocks or bonds. What we own is oil wells and the oil. And so when Biden cut the Keystone XL pipeline off, oil went from 30 to 130. I actually liked the guy for a while. Anyway, Ral, I could go on forever.
But I got to jump in. I'm going to interrupt one last time because you have a new education program coming out.
Yeah, look, it is so important for people to get the right education. It is imperative. And there are lots of kind of scams around education. And we wanted to democratize the same kind of quality of financial education that we've done with financial information. You guys watch Real Vision, you know the quality. And it's not, I can't fully announce what we're doing, but we're really going to change the game on what it is, because these things cost fortunes, thousands for a good course. It's thousands of dollars. Most of them are not even done by people who've been in the markets, but we're going to change everything and create something nobody's ever done before. So look, if anybody's interested in education, and if you can tell from this macro environment how complicated it is, you need to figure out how to run your portfolios, then realvision.com/waitlist. And if you sign up early, you'll get some treats for doing it.
All right. Well, my friend, keep up the good work, and thank you for making us richer.
Yeah. And let's keep our tin helmets on for the next few months.
I know. So thank you. Keep up the great work, Raul.
Yeah.
Thanks a lot, guys. Take care. Great to see you as ever.
We'll be right back for the final words. So thank you, Raul. Bye. Welcome back, Robert Kiyosaki. A very special thanks to an old friend, Raul Pell. Man, that boy is a smart guy because he lives in the trenches of reality, not in the halls of academia. You can listen to the Rich Dad Radio program anytime, anywhere on iTunes and Android and YouTube, and leave us a review whenever you can. And all of our programs are archived at richdadradio.com. We archive them because we're only an education company. We do not make recommendations. We especially do not recommend to do what we do, because what's my rich dad taught me. That was pretty funny. That I think buying that bar is even more important, Kim. Because I think the drinking is about to start. No, I'm okay. Okay.
I think it's already started.
As they always say, it's time to start drinking heavy.
I'll tell you, if this show doesn't get people to wake up, to start paying attention, to start getting educated, I don't know what will, because he's talking about 4 months, 3 to 4 months. I mean, we're going to see massive changes coming. We already said things are changing every single day, but wow, that's a quick prediction.
Well, let me say this again. It's May 23rd, which was yesterday, 2022. The IMF says we're going to face the greatest financial crisis since World War II. Macroeconomics is through history. Mm-hmm. The fall of empires and all this. I think we're falling right now. And what I had to look at from his point of view, what do we do with all these poor people without any money? Yeah. That's a huge problem.
And he said this is the fourth turning. Can you explain what the fourth turning is?
Yeah, that was Howell and Rice. They're very famous. He said all cycles go through. It's approximately the age of a human being, 20 years, 20 years, 20 years. Said that one also. And it matures and the whole thing changes. Fourth turning is always marked by weak leadership, and then we have that today.
Got it. We never had weaker leadership.
Oh my God! But I liked Biden when he cut when the price of oil went from 30 to 130. And I want to just state one more thing: is that Kim and I don't own stocks and bonds and mutual funds, except companies we started. And we also, when he's talking about biotech, we're going to meet with John Lang because our biotech company is going public. And we're greenies because we sell carbon credits. So there's so many ways you can make money. I think that's really was Raul's message. This is a great time because the fourth turning is here. But the people that get hammered are the people operating on yesterday's ideas. As Sarah and I and a bunch of us did this show, we talked about how bull markets make stupid people look smart. So you could be really stupid and you put your money on Apple and you got really rich, or Bitcoin and, oh my God, I'm rich, I'm smart. And then the bear market shows you how stupid you are. And that's why what Ral is saying is going to come quick, right?
Yeah.
And that's what he's saying. All the smart people who think all the stupid people who think they're smart are going to find out how stupid they are. And it's going to be a very, very interesting time. Sarah, what you pick up?
So his 4 months kind of lines up with the guy we just studied last Thursday. I can't remember his name. We watched his videos. Anyway,
Pinto.
yes,
Michael Pinto.
He had said, he thinks that a recession will be here by the end of the year. So that October timeline lines up. But
let me explain why. Because it's an old saying: the bull goes up by the stairs, so it takes a long time. But the bear goes out the window, and when the crash comes, it comes so fast on you, you don't know what's going to hit.
Yeah. And then I was just reviewing Bert Doman's episode and he talked about this is the greatest opportunity of a lifetime. But to our point, and we wrapped it up with Ral's education platform, you have to be educated.
You have to be current. Most people's ideas are so obsolete.
Yeah, because like we've been talking about, everybody thinks in macro. Everybody thinks, how is this affecting me today?
Yeah.
So they're just thinking of the immediate solution, not a long-term solution.
Well, we did some fantastic programs. Go to Rich Dad. We did a thing on micro versus macro, and micro is this: you're standing by your SUV pumping gas into an SUV that you've leased, and you're filling gas on a maxed out credit card, and you're wondering, why are the prices of gas going up? That's micro. As you chew on your chicken leg going, why is food going up? That's micro. But macro is invisible. You cannot see it because it goes throughout history and time and the ups and downs and all this. I think the most important message from today's lesson is the bull has been going up the stairs for a while now. It's about to go out the window. So that's what May 23rd, 2022, in Davos, Switzerland, when the IMF says we're going to face the biggest economic headwinds. And voila, Ral Powell is on Rich Dad Radio. I can't believe that. What a gift. Kim, final words.
Well, final words is I hope people have been preparing, because as he also said, the person with the cash in a recession is the king. But if you don't know what to do with that cash, you're going to just sit on cash. So this could be the greatest opportunity. It's going to be, and everybody, so many guests we've had on our show say we are in for a rough ride, and we were certainly going to be in for a rough ride. It's not going to be pretty, but it doesn't have to be that rough if you've got a little bit of financial intelligence.
Yeah, there's going to be more opportunities floating to the surface as well as bodies floating to the surface.
You can see them if you can see the opportunities.
They're all over the place.
Yep.
All over the place. But if you're educated by an idiot, you're going to just do what idiots do. Final words, Sarah.
Final words. I always appreciate having him on the show. It had been, we last talked to him right before COVID hit. So that's how much has happened, since we last spoke to him. So it was great insight.
And please check into his educational program. He is one smart guy. His organization is incredible organization.
Talk about real teachers and real educators. So we'll add the link to his new education course in the link in the description below.
Right. And so anyway, the greatest opportunity is coming, but also the biggest crash is coming. Take care.
Thank you.
you.